The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 9th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, TV Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets. With the bulls and the bears, the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in. Now's not too soon. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on terrific, sometimes referred to as Turnaround Tuesday. This is TFNN. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow up 16 points, trading at 18,545. S&P is up 2 points at 2183. NASDAQ Composite up 15 points. She's trading at 5228. Russell 2000 is flat, trading at 1231. How about that DAX in Germany? 260-point Roonies to the upside. That's over 2%. 2.25 or so. The FTSE up 42 points, closed at 68.51. Gold's up about $5 at 13.46. Silver is flat, trading out at 19.85. Light sweet crude back 31 pennies at 42.71. So turnaround Tuesday, it could be turning around to the bearish side. Now, when I say bearish side, I'm really referring to some type of retracement, not a significant top, but nonetheless, we should expect the markets to retrace. And there are some signals for us to pay attention to. A little bit of divergence. I don't have really confirmations. Of course, it depends on what time frame it is that we're trading. Now, earlier this morning, I filled in for Larry, the 9 o'clock show. We started off taking a look at the NQ. So for all of you that have, listening on that show, it only makes sense that we go back to the NQ and get a feel for what's happening. So let's put up we'll go from the 30-minute, then to the 2-hour, then to the 5-hour, and then to the daily chart, each having a different message. Now, one of the things that we look for, let's actually go ahead and do some wave counting up here to the upside. We don't have any. I'm looking for patterns. And so as we take a look at patterns, we do know on a 30-minute basis, yesterday at 5 o'clock in the morning, price was moving higher, doing less relative energy. You got some nice bearish reversal signals at 5:30 and at 6. It was the follow-through. Price goes ahead, moves down, makes a retracement. Looks like about a 0.608 retracement of the breakout session, then resumes higher. It has not completed an A to B equals CD to the upside just on that last little break. That would look like this. Let's go price that in. That would give you a, whoops. Yeah, that wasn't the correct, didn't grab the correct candle. We're going to do that once more. I'm grabbing the breakout from 9 o'clock in the morning. That looks like on August the 5th, all the way to this high at 5 o'clock in the morning yesterday, down to the retracement into about 10:30. So a 1-to-1 A to B equals CD says 48.1950 would be the price target. Is there anything inside of this NQ chart that suggests that there's a 30-minute topping-ish type pattern, albeit on the short term? And the answer is, other than a double top out here, a test of that 5 o'clock in the morning time frame, the answer really is no. Can price pull back to 47.88? Yeah, which is the bottom of its weekly, its 30-minute TAS market profile. But on the 30-minute chart, nothing of significance that I see at the moment. Let's go take a look at the 2-hour chart. The 2-hour time frame, well, it's a different story. Now, the candle session we're looking at closes at 2 p.m., so when we're off the air. And so the question is going to be, what kind of candle, where does price close here at 2 p.m.? So we've got 50 minutes before we know. If the candle closes halfway into the bar, the prior bar, this is the one that ended at noon, and the price point would probably be like around $47.99 or lower, then you'd have a dark cloud cover pattern. Now, this could also engulf the prior session by closing at 2 o'clock below the actual open of that candle session. I'll give you that number as well, and that was at 47.95. You're at 47.95.75. So if you engulf it, and the reason why we're paying attention to this is simply because on the 2-hour chart, let me pull this back out here. On the 2-hour chart, well, how far back do we want to go out here? On the 2-hour chart, since the bottom back here on June the 26th, that's really going back a long way. This is a pattern where we have seen, because price moving higher due to less relative energy, we have seen where some retracements have occurred. They haven't been anything really anything substantial, but one of these times it may turn into something substantial. In any event, we do not want to ignore this. And again, this is a 2-hour chart. Now, the real key here is right now price is just coming back and testing Stevie's red line. So that's normal. That's natural. That's right around the 47.96 area. And then slightly below that, we've got some TAS market profiles. That suggested that the 2-hour time frame was going to run into a bit of turbulence. Why? Because we have a new profile. This formed here at about 8 o'clock this morning. Or was that yesterday? That was yesterday morning. Take a look how this 2-hour profile went ahead and formed within the prior profile. That was just indication that, okay, the momentum to the upside is kind of waning. So we've seen that. We're seeing that here with the price pushing higher with less relative energy. Now, the real key is going to be 4 o'clock. If you get a bearish reversal signal here at 2, and then you get a push lower at 4, that suggests more retracement ahead of us. That's what the 2-hour time frame chart says. How about the 5-hour energy drink chart? That's the 300-minute chart. And what is it doing? Well, interestingly enough, it's been moving higher, doing it with less relative energy. No bearish reversal signal yet. And on the 5-hour time frame, price is trading above Stevie's red line. Still at about the 47.94-ish range. You're at 47.96, so it's not much above the red line, but nonetheless, it is above the red line out here. So we want to pay attention to the candlestick on this 5-hour chart that's going to form going into the contract close for the afternoon out here, because at this stage, unless there's a big push, which there could be between now and 2 o'clock, we don't see a bearish reversal signal. Why are we paying attention to that? Well, one, because that's how the market communicates to you and I, especially at patterns. That's why I'm doing a workshop for my subscribers tomorrow at 5 o'clock, 5 to 6 p.m. 1-hour workshop that in that 1 hour, you're going to get the education of a lifetime with regard to Japanese candlesticks, and really with regard to what it is that you need to know to assist you with your trading from here out forever. So come on over to the homepage at TFNN.com. Entry into the course is very simple. It's $49. Now, that $49 is $100 off my monthly newsletter service, $149 out there. So you're going to get a newsletter for 30 days. You're going to get an extraordinary workshop, let alone the money management workshop, access to me to assist you in understanding how these patterns and these candlesticks play into your trading. So we've looked at the 30-minute, the 2-hour chart, the 5-hour chart. We're going to go take a look at the daily and get a better feel for what the market is doing. Well, we know that it has been pushing higher with less relative energy. However, no bearish reversal signal. We're just seeing some noise during the chart here today. We still pay attention to the short term because you're going to see a turn on a 10-minute, then a 30-minute, then a 2-hour, then a 5-hour, and so forth. So we want to be paying attention to each of these charts. But here, the daily says, really, Steve-O, not until you get below 4770.73 is there anything to worry about inside of the NQ. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow's up 14. S&P is up a couple points. Mark writes in. Mark from San Francisco. That's very cool. Thanks for listening to us in San Francisco. He writes in and asks if I would take a look at light sweet crude. So let's go look at it. Now, I'm going to put up a short-term chart. And in the short-term chart here, if you watch us on TigerTV, I sure hope that you are, you're going to see a nice little rising price channel that has formed, that has contained price, both to the upside as well as to the downside, that really began forming back at the bottom out here on August the 3rd. And that's the green diagonal lines from lower left to upper right. Now, as we came on at 1 o'clock, we saw price come back and, in essence, test the bottom of that rising price channel. Price is trading just slightly below it, so we'll have a little bit better information in about 11 minutes out here as to whether or not a break of the trend is underway. Now, we've got to give it just a bit of room out here. Here's the pattern that we see, or that I see right now. We can see that we've got this little double top, and as well, we might have this little double type bottom out here. We can actually take this back just a tad further. So let me drag this back here. In fact, as I take a look at market profiles, there's nothing in here that's necessarily good on the 30-minute basis. So I'm just going to go ahead and turn those off because they're just simply cluttering up the chart. And I don't like clutter. You don't like clutter either, right? I know you don't have clutter in your life out there. So why would we go ahead and clutter our chart when we don't need to? Now, of course, I'm turning a couple things on and off at the same time. That was just a strategic pause so I could do that. Now, what we are seeing here is Stevie's yellow box, right? That is a rectangular potential consolidation pattern that is trading within. So the question is, hey, even if it trades below the rising price channel, is that a reason to get concerned? I would say the reason to get concerned is if it closes below this most recent swing point, which is at about 3 o'clock in the morning, down at 42.50. because then you've got a price projection. Now, concern means what? Price projection here equal to or greater than the consolidation. So there's no A to B equals CD pattern out here. All we have is really this consolidation. And then we can take a look at some other retracements. That would say light sweet crude would pull back into about the neighborhood of 41.60, somewhere around there. So we'll see. We'll check back in. Remind me. We'll try to check back in at the end of the program to see where, in fact, by 2 o'clock, where light sweet crude is trading. Now, that's a 30-minute chart. Let's come to the daily time frame. And in the daily time frame, we will go ahead and put on our market profiles out here. And we'll turn off the rising price channel as soon as I can figure out how to do that. There we go. And here's what we know on the here's what we know. I guess that's the consolidation that's drawn in there. Aha. Let me turn that off, too. Let me see. Does that work? Yeah, that worked. That worked. Okay, now it's a little bit clearer. So we can see the price is just simply stumbling, running into the top of its TAS market profile, 43.33. Tested it yesterday, tested it today. That's acting as resistance. So that's a really important, muy importante level of resistance, because any close above it says price is going to move up to 46.15. 44.36 would be the next move. Likewise, it does say 41.78 on a pullback. Which would be the daily point of control. So just remind me, we'll go back and take a look at that 30-minute chart, see if there's any kind of indication as to what light sweet crude wants to do. That was the daily chart out there. What do we want to look at next out here? Let's just go take a look at advanced decline, oscillator readings, see where we're at in the New York Stock Exchange, in the NASDAQ Composite, and the Dow. And in the NYSE, we continue to get that deflection at the zero level out here. So, we know that the market has been working sideways, been trading in this little consolidation zone. It's been working off an extremely overbought condition. You might say, well, why do you say it's extremely overbought? Well, on the trading session of July 12th, if you take a look at the little box, the data box, that's in the kind of the lower left panel right now, you can see I am focused on the trading session of July 12th. And on July 12th, you had the New York Stock Exchange advanced decline oscillator reading get to a level of 193.96. 150, even Steven, gets you into overbought range. Price moved a little higher and was at 149 the day before, moved a little higher, and then it has worked off that overbought condition the most bullish way that it can, which is by moving sideways. Now, here's what we don't know. Is it distribution or is it just working off an oversold condition? Well, as long as price trades above, this is the New York Stock Exchange, 10,641.62, that's just building cause to move higher out here because it's still in the upper part of its range out here. That's the NYSE. I would feel more, I would have more conviction in that call if we could see the price oscillator move above zero. It's not above zero, and so therefore it gets conviction, but it's just a little less conviction than you'd really like to have out there. So that's the New York Stock. That's the story of the New York Stock Exchange. In the case of the NASDAQ Composite, its oscillator reading is above zero. It's bullish. No bear signs on the daily chart in the NASDAQ Composite. There were no bear signs on the daily chart for the NQ out here. So everything looks hunky-dory, whatever in the heck that means. Now, in the case of the Dow, very similar to the reading. It looks like we're looking at the same chart when I look at the New York Stock Exchange, but it's not. It's the Dow. It's measuring its advanced decline oscillator. It is still below zero out here, and today has been a test of that swing point, that July 20th swing point. At least I believe it was a test. Let's go check it out. The bottom of that July 20th swing point, that's priced out at 18.555, I should say. And, of course, yesterday was a test. So you got a test. We know we're in light volume season out here, so we've got a test and rejection of that swing point from July 20th. And the price oscillator, advanced decline oscillator, I should say, is down below zero. So, it's not a bullish signal. It's more neutral than it is anything else. If I look at the daily chart out here for the Dow futures contract, and you can see, again, resistance, Stevie's red line. So not necessarily the most bullish. It's not bullish at all. Closing above 18,493, different story out there. So the end of the day, today's close will be important. But, let's give you the number for the Dow. Let me just do that, right? Where can I do that easily? Oh, how about that DAX? Let me go back to the DAX. Now, let's do this. I'll give it to you. I'll give you the number for the Dow first, then we'll go back to the DAX. So in order for me to give you the number for the Dow Jones Industrials, the number you're going to be watching and paying attention to, I'd give it to you. I can't even read it. So we're going to do this. We're going to put the data box up on my screen, and then I'm going to look off to the side here. And the number is 18,561.36. You're at 18,538. 18,561.36, a close above that. And that is bullish for the markets. Now, back to the DAX. I mentioned the DAX, but we didn't even go look at it. So let's go see what in the Sam heck it is doing out here, because what's one big move going into the close of the DAX? That's a wide-ranging bar. And you know the response here. Do markets end on wide-ranging bars? And we know the answer there is no. They can take a timeout. But do they end on wide-ranging bars? No, not typically. So why would we think that this one would end on a wide-ranging bar, let alone prices up above resistance? Now, you would say, hey, where is resistance if we take a look at the DAX? Well, resistance is where the bears actually show up. And they show up by generating some type of bearish reversal signal. In the case of the DAX out here, let's go take a look at it. That's right here. You got this nice little bearish engulfing candle, an outside day for sure, maybe key reversal. That is right here on the trading day of May 31st. Net high is 10,365.24. That's really the key level. No bearish reversal signal here. Well, right here is one. So I could give you a bit of a range, but really it's 10,365.24. This thing closed at 10,692. Strong, like, well, might be an A to B. We'll see it to the upside. Hope you're right.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the show, folks. Let's just go back to the DAX here just for another moment, please. And the reason is because what the DAX actually did today is extremely bullish. So, regardless of our markets here, if you believe that we are in a one world market, what the DAX did today was pretty amazing. It took out a descending trend line. So today, the DAX broke its long-term trend to the downside, and with a really wide-ranging bar. No idea about volume, and if you just simply, you say, how do I know that, Steve? Well, I'm just going back to the highs that it formed back in April of 2015. That was priced out at about the 12,391-ish type area. Next touch point that you can use is this bearish engulfing candle on December 1st, right around 11,430, and a bit of change. You draw the line there, and you can see that yesterday was a test of that level. That was rejected, and today was just simply a catapult higher. So what does that mean? Well, it means the downtrend has been broken. That just simply has been broken. Is it a real breakout? I don't know. At this stage here, we have to assume that it's a real breakout. I mean, to assume otherwise would be, well, I'm not going to assume otherwise. It's actually broken out. Why would I assume otherwise? Now, there's an A to B equals CD pattern out here. That would give you a price projection, not that much higher, 10,989 out there. So it seems logical to me, you're at 10,692, that you're looking at about another 300-point move to the upside. Now, that's just your one-to-one. I would say more likely than not, you're looking at 11,472, which gets you back to that bearish engulfing swing point here from the December 1st time frame out there. That actual high was 11,430. So 11,430, 11,470 looks to me more likely where the DAX is headed to. So that is a strong bull out there. That is in the DAX. We might as well, as long as I'm over here, and then we'll go look at natural gas. For one of our Denners out here. Let's go take a look at the FTSE. What is the FTSE doing out here? So in the case of the FTSE today, yesterday, the day before, breaking above the 0.6. Remember, the FTSE, this was supposed to croak the markets. It actually gave us a nice buying opportunity, right? But if we take a look at the FTSE, going from its highs back here in April 27, 2015, it's a daily chart we're looking at, all the way down to the lows in February 11th, down to 54.99. Price is now above where? Above the 0.786 retracement level. So what does that mean? Hey, the 0.786 is a natural area for travelers to get up, just as the 0.618 is, just as the 0.382 is. You're up above another level, says you're on the rise. That means you're going to go do a 100% move of a move. The FTSE is headed back to 71.2274. It, too, has an A to B equals CD pattern. Let's go take a look at it. And why is this important? Well, it's important because, if we're in a one-world market, what are the other markets doing already above the 1-to-1 A to B equals CD? It says 69.68 is the next target to the upside. I would say between there and 71.22 is really where the FTSE is going. So world markets look really, did I say really? They look really pretty solid out here. Let's go take a look at least those two markets. Maybe we'll go take a look at the Asian markets as well to get a feel. But the first request was to go take a look at natural gas, and I haven't done that. We're looking at the September contract. That's the current contract, I believe, is it not? What did he ask me to? Yeah, he did. So let's take a look at natural gas out here and see what it's doing. Now, as I put this contract up on my screen, this shows a really nice rising price channel and suggests that natural gas is on its way to pulling back into that level. Now, is it going to pull all the way down to the bottom, which would be somewhere around 251? I don't know, because if it does pull down to that level, if the rising price channel does not hold it, then you've got an A to B equals CD to the downside. That still is a viable pattern out there, or viable pattern. Your A point is out here at the high on July 1st. Come on, work with us. There we go. Your B point out here is down on July 21st. Your C point, a potential C point, is July 29th. Well, how about that? I take that back. That's why we go ahead. We put these A to B equals CD patterns in here. So, God, who was asking me? Danny, was that you? Danny in Atlanta? Who was asking me about natural gas? I don't know who was asking me about gas out there, but let me make sure this is, it's today. This is trading. In any event, it doesn't really matter. Here's what we know about, that was Danny, thank you. Here's what we know about natural gas. It's about ready to, it's trying to form a Gartley buy pattern. A Gartley buy pattern, which should be about the 251 level, which would be right into the bottom of the rising price channel. And that would be a Gartley pattern because it'd be some type of retracement of that move off of the lows here from May 19th up to the high on July 1st to be a 0.618 Gartley buy pattern. That is assuming that the cavalry arrives and gives you a nice bullish reversal signal. So it looks to me like that is what natural gas is doing as we speak right now. I hope that assists you in probably a pattern that you saw as well. Okay, so I think if there's some other questions that were posted in the den, because there's been my screen for the den feed is kind of small. Repost it for me, please, and I'll see it right away, and I'll make sure that I get to it for you. And if there's no questions, well, then gin one up for me, would you? After doing Larry's show, I don't even know what to talk about for during this session. You know, we got kind of this flattish market down here, but hey, I'll find something to talk about. How about that? I'm pretty good at doing that. And so, I know. Let's just go see what else is going on around the world. Let's go take a look at, because we certainly don't do this during this show. Let's go take a look at what the Shanghai is doing. What the Shanghai is doing out here. What would you draw in here? I draw in a little rising price channel. Might as well do that, right? We saw one inside of the DAX. I think, didn't we? Or one of the something that we're looking at. I'll just put it right about there, maybe the top about here. So we know price is gradually moving higher. I did cover oil, Gator, and we'll cover it just at the end of the show again out here. So as opposed to doing it right now, but I want to update traders on what oil is doing. So what is the Shanghai doing? You know, in the case of the Shanghai, where is my other chart? Oh, I did not mean to delete that. Son of a gun. That could have been the chart I was looking for. Oh, my gosh. Oh, did I do that? Did I really do that? I'll be a son of a gun. Okay. Well, I was going to show you something. And still looking just in case it's here. It's not. So what is I just wanted to see where Stevie's red line was in the DAX. I'm going to do that just by simply coming over, or the Shanghai. So we're looking at the Shanghai. Give me a moment for that to pop up. And yeah, 30 looks like about 31.53. You're at 31.67. So as long as it trades above 31.53, it's going to go make a run for the swing point out here from July the 13th. And that's in the 31.90, 32.12 level out there. That's what's going on in the Shanghai. Let's go take a look at what's going on in the Hang Seng, down 29 points here. But not a big deal, just an inside day. I mean, it traded inside yesterday's candle session, the body of that candle. Let's look at the A to B equals CD patterns that are present out here. The A point, February 12th. The B point looks like April 28th, and your C point down here looks like on May the 13th. So looks to me like the Hang Seng, nice bullish-looking chart out here, at least to set up a bearish Gartley pattern. That would take into 22,969 as its next move. That is the Hang Seng. Let's see, we got 10 seconds before we go to break. Let's look at the Nikkei up 114 points. What is it doing out here? That is the question. And at this stage here, a short-term trend line, and I do mean short-term. Let's see, price is above that. Looks to me like the Nikkei is going to go take out or test that July 21st high, 16,938. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, to the Turnaround Tuesday. Things are turning around to the downside. The Dow is just slightly negative. S&P is flat. Composites up 10. Russell 2000 is up 50 cents. Have a request to go take a look at Alibaba. BABA is the ticker symbol. And as we look at the equity out here, you know, kind of a number of different pieces of information that are being communicated to us. The first is that if I look for daily resistance out here, there's a couple of different spots. The first one that I'm looking at is on April the 21st out here, and that high is 81.78. A little three-river evening star pattern that formed out here, and so that says, okay, you got a line of resistance. We can see how that level acted as resistance all the way up until it was taken out on July 18th with 12 million shares. So 12 million shares was taking out 78 million shares. That doesn't really cut. That really doesn't cut it. You know, and so, but it was taking out really what I can use as, now I can't use the swing point is really going to be that 78 million shares. So you're up above a B point of an A to B equals CD. Who asked? J&J. So you don't have a confirmed A to B equals CD to the upside, but we're up on light volume. Let me also just put our TAS profiles up just for a moment. As we take a look at it, it's going to show us resistance is really, it's trading right into resistance or right above it as we speak right now. And that is priced out at $85 even, Steven, but you're at 85.28. So close above 85.28 is a good thing for it. Let's go ahead and turn those profiles off and instead go a little bit further back on the left-hand side of the chart. And we can see a couple different areas of resistance where it's up above. That's was this gap down. The gap down had 23 million shares. That was back on January 4th. We won't paint in that portion of the gap. We have another level of resistance that was formed out here, Three River Evening Star. Again, that's on November 4th, the 5th, and the 6th in 2015. It says that could be the resistance zone. So it looks to me like Alibaba just headed up into resistance, which is if it can get above that TAS market profile high, then this ought to go tag 86.42. Does that mean it's going to stop right then and there? No. And 86.42 will be a little bit of a longer A to B equals CD out here. So watch the November 5th. Let's see. November 5th is 86.42. Yeah, 86.42. 21 million shares basically. If you can clear 86.42 with more than 21 million shares, this thing will run higher. You say higher to where? Then you can go all the way back to the swing point high from May 22nd, 2015. That's in the $95 area out here. So nice move off of the bottom. Been consolidating, been forming a little bit of a base, and now it has moved higher. 86.42 is Steve-O's call as long as it can close above $85. I hope that helps you out. JNJ inside our Tiger's Den. Okay, what do we want to go look at out here? Probably we want to go look at, I know. Let's go look at the High Asset Income Return Fund out here, the HIO. Why do we want to do that? It helps to give us some clues as to what the market is doing. And what I mean by that is earlier, let's go take a look at this. I know this is the same way. So when I did the last segment this morning of Larry's show, what I did was pointing out, identifying the most bearish case that I could make for the market. And the most bearish case was the mere fact that we had the equal weighted ETFs, the Qs, QQEW, and for the SPYs, not confirming the move higher that we had. Whenever that happens, it's not a good thing. Doesn't tell you how deep a retracement, but it's not a good thing out here. And you can see we've got QQEW. That's in the upper portion of my screen. The bottom portion is the regular QQQ ETF that you're used to taking a look at. You can see how the Qs are moving higher, and the equal weight is not confirming that signal out here, at least not yet. We took a look also at the Guggenheim. I do like saying Guggenheim. The equal weighted S&P 500 also has that same pattern where the SPYs have been moving higher, but the equal weight has not been moving higher out here. So that was saying, okay, that's a clue that there's a potential problem out here. And then when we come and take a look at that 2-hour chart, which we're going to really look at as we go into the last portion of the breakout here, you're going to get your 2-hour reversal signals in the ES Mini and the Dow inside the NQ out here. It looks to me like pretty clear. And if you get follow through, it says expect some price pressure inside of the markets. If we go take a look at the HIO, that is the Western Asset High Income Opportunity Fund. So here's where people are searching for yields, and typically it's also a sign of liquidity. As this moves higher, you can see this is in a nice little rising price channel. As this is moving higher, it says, hey, plenty of liquidity that is out here. So there's nothing when I take a look at divergent patterns that exist, and this is a real nice tool out here. There's nothing inside of the way that this ETF is behaving versus the S&P 500. So what do? It says that the pullback that we're receiving at this moment here, turnaround Tuesday, could just be a couple-day event, something along those lines out here. Is there anything else here for us to pay attention to? I think the answer is no. There's not anything there that I can show you that would be worthwhile. Let's go take a look at the VIX index. Let's go see what it is doing out here. Trading at 1160, well above the lowest lows out there in like the $9 range, $9.90, $9.20, something like that. So that's not a big deal. But what is the VIX index doing today? What is that candle that we're looking at? Nothing just yet. Looks like it could have been, should have been, might have been a hammer candle, but no, it is not. And as I take a look at where the VIX itself is trading, it's trading below its lower Bollinger Band out here, a terrific tool to apply to the VIX index, and says in order for the market to get any juice to the downside, this needs to close above 1171. Otherwise, just kind of another little sideways-ish type day out here. And that's what at least what the VIX index is communicating to moi. What else now? Let's go back here. Let's take a look at some individual stocks. Or somebody said, how about BID? BID is a stock out here, I'm going to guess. BID, Duffy, BID. Let's go take a look at BID. Sotheby's, hey. Now, that makes a lot of sense. I mean, if I was looking for a stock symbol, for Sotheby's. I think bid would be it. And yeah, you're right. Huge volume yesterday inside of it. Must have been an earnings report or something along those lines out here. We really don't care what it was, but it was huge. Big, wide-ranging bar, because make sure you fill in the gap out there. So big, wide-ranging bars. Of course, we can say, do markets end on wide-ranging bars? And the answer, of course, is no, they do not. Now, it had a big, wide-ranging bar to the downside. Does anybody see that on my chart here? I'll just kind of blow it up here for a minute and let your eyes kind of scan the left-hand side of the chart. Do you see what I see? Sounds like a Christmas tune out here. What I see is I also see a wide-ranging bar to the downside, a little bearish engulfing candle out here. And that was this candle right here. The trading session was on November the 9th. That was pièce de résistance, which was taken out, by the way. That was with volume to the downside of 2.5 million shares. Yesterday, to the upside with 9.4 million shares. Duffy, that is how you like to see a market take out a resistance zone. It just is a bulldozer when it takes out a resistance zone like that. The next resistance zone out here wasn't that much further above the 3540s, where there was a gap down on the trading day of August the 24th. So that resistance zone was also 3590. So that looks pretty good. Now what you've got is an A to B equals CD to the upside inside of Sotheby's out here. So looks like they're doing just fine. Your A point down here on that little high volume low from February 11th, your B point, that's going to be out here on June 8th, and a retracement down into, it looks like, June 27th. Hit the 1-to-1. It's moving higher. 42.92, Duffy, is where it's headed to. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks, as we head into our last segment here. I surely am enjoying the Olympics out there. Just great competition, and, it beats the heck out of all the other stuff that's on the boob tube these days. Hey, I have a request to take a look at two equities here as we finish out the show. CareCap Properties, I'm assuming it's properties. CCP is the ticker symbol out here. So we can see a level of resistance, big, huge, bearish engulfing candle that had formed out here. Here's the one we're looking at, wide-ranging bar. This is on the trading day of March the 10th, and we can see that price is now up above that level. That says that the character of this market has changed, and that should be support. $29 even Steven is the number out there. What this also shows us is really, somewhat of a consolidation that this was trading in. And when you break a consolidation, as this equity has done here, that consolidation in essence looking pretty much like this. And that means that what we can do is we can draw a little bit of a box out here that says as long as price is able to continue trading above 29 bucks, then it gives us the potential of a price projection of 33.37 out here. And that is on CCP. The next level of resistance that it has to clear out here in order to attain that objective is going to be this little gap down, this little open window that occurred on January the 7th. So 3106 is where CCP is headed to. That's based on the candlestick charting and the consolidation pattern. Before we finish this off, let's take a look at our TAS market profiles. We can see a brand new day, not a brand new, but a daily box that formed maybe about 2 weeks ago, the top of which is 29.57. That is resistance. So in order to see 3106 on this JNJ, you need to see this close above 29.57. That will then go ahead and set off that target, and then perhaps even to move up into that $33 area. A question, I hope that answers your questions with regard to CCP. Let's go take a look at BIIB out here. BIB, oftentimes what I need when I'm eating, especially some stone crab out there. Of course, it's been a while since I've had any stone crab. So what is Biogen doing out here? Of course, I think last week on Thursday, there was some news of a buyout or something along those lines, if I'm not mistaken. Nonetheless, we're not going to remember about that years from now when we take a look at the stock chart. Here is what you and I know about Biogen, and that is this. Right at the trading session, let's actually draw the correct line out here. Come on, work with me. There we go. It's right here on the trading day. The resistance zone is the high of September 21st. That's what I'm going with. And that's at 338.51. Why? Because that's where we've got, in essence, an open window. We've got a bearish reversal signal. If price is able to, at any point, get above 338.81, then you're looking to move to 385 out here. That is in Biogen. Ever since that trading session here on August the 2nd, we've seen price really trade with inside this candle. So inside days over the last 2, 4, 5. If over the course of the next 2 days you see a move above this high from the trading day of August the 2nd, that is at price point of 333.65. That would actually be a rising three pattern, a Japanese candlestick that is a continuation pattern. You don't see them often. They need to occur within a certain period of time out here, but that would be so what's that continuation pattern going to tell us? You're going to go up to the next resistance area, 338.51, not that much higher, and then 385.05. So SAT, I hope that helps you. What does SAT stand for? And welcome to the den. I'd say Saturday is one of my favorite days out there. But, really, my favorite is to stay tuned here at TFNN. Because coming up next is our one and only polar bear, Mr. David White. And after David, we've got the Tom O'Brien Show from 3 to 5. Have a magnificent, you can't have a magnificent Monday, but have a terrific Tuesday. And I'll see you on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.